friends. We are here to discuss the impact of demonetization on the Indian equity markets. Uh, Demonetization, this is one of the biggest steps taken by the Indian government to curb black money. This will have nationwide impact on various sectors. Most importantly, what we can say is that in the short to medium term, the impact on GDP will be significant because there is going to be significant decrease in liquidity in the system. As liquidity declines, that also leads to decline in the overall money in circulation, so which will essentially impact the GDP numbers. So how this will unravel over short term, medium term and long term is a very important thing to understand for the equity markets. We believe that the impact on the consumer sector, which is essentially the staples categories, which includes products like soaps, detergents, will be short-lived. These categories should recover in the next 1 to 2 months. So the likes of Hindustan Unilever or ITC should see very short-term impact. More importantly, these companies would also be extending credit in the market, so that would mean that they would be blunting the impact of the liquidity crunch somewhat. So our sense is that the most likely to recover or come out of the whole demonetization liquidity squeeze will be the consumer staples. The medium term impact will be felt by the consumer discretionary companies, where we are going to feel there is going to be significant erosion of wealth for people. So consumer discretionary, which includes categories like white goods or automobiles, these are the categories which will see impact in the short to medium term. In fact, even companies which are in the paint space like Asian Paints would also see some bit of impact. So we believe the overall impact on the consumer discretionary space will be significant. Also, plays like the household products, which includes cables, then tiles. This industry would also see significant impact because these are significant capex items. So there will be medium-term impact, dent in corporate earnings in this space. Lastly, we would see significant impact in the real estate space. So real estate is very much linked to the amount of liquidity into the system. So we believe that with the curve in black money and so many real estate deals where there is cash component involved will take a big hit. So real estate will be impacted in the long term. So we could expect that real estate will be sluggish for the next 1.5 years. So overall, our strategy on how to play the whole demonetization theme is, one is to play companies which are not necessarily linked with demonetization, which would be companies like in the pharmaceutical space or in the IT space. Second is playing companies which could benefit from demonetization, which is banks. I would say PSU banks will benefit because they would see increase in corporate deposits, in the CASA deposits. Also, there could be some bit of capitalization possibility if the government were to see some bit of I would say that if some undeclared money is not exchanged and unaccounted money is not exchanged, and there is some bit of chance that government will be able to gather some funds which could be used to capitalize bank accounts if there is higher declaration in terms of income tax, or there could be some other measures or provisions which could be made. So that's another. And the last will be the plays which are safe in nature in this risk aversion scenario, where we believe that the consumer staples will have reasonable visibility in terms of earnings for FY18, because by then I think most of the consumer companies should have seen the problem through, and most likely with the correction in multiples they could again see improvement in multiples, considering there is a chance of decline in interest rates. Another area is that government spending can pick up, which will essentially benefit the infrastructure companies. So our sense is that the spaces in consumer discretionary, I would say that companies which are expensive, one can start looking at mitigating those positions. Even NBFC space, where there is going to be a lot of stress in terms of collection, one could look at reducing the position in that space. On the other hand, adding positions could be in the space like consumer staples. Then we could be looking at banks, and then pharmaceuticals and IT. So this would be our strategy for playing the whole demonetization theme.